Hey traders, a very warm welcome back to you. So today we're back in front of the whiteboard and we are talking about 5 good reasons to trade Forex, currencies, FX, whatever you want to call it. We want to know what it is. What are the 5 good reasons? I've got plenty of reasons, but let's talk about the 5 top ones I think are the reasons we should be trading currencies. Okay, number 1 is accessibility. What do I mean by that? Literally means that almost every broker across Europe, most of the world I would guess as well, don't know, familiar with other countries, but I would assume that the first thing you can trade on them is currencies. You might be able to trade stocks, commodities, indices, but currencies are likely to be offered on almost every broker that you can possibly get access to, and especially over in Europe and the UK. They are very easy to access. It's a very small barrier to entry. Anyone pretty much over 18 can open a trading account. You don't need a lot to start off with as well. You can put a few £100 in, a few $100 in, a few €100 in, if you like, and just get started with a very, very small amount. So it's very, very accessible. The charts are very abundant everywhere as well. You don't have to pay a fee to get the data like you do for stocks or you do for commodities. If you're trading a specific futures contract, you have to pay the futures exchange for that actual data feed. So you can get it anywhere. Charts are free. There's loads of free charting packages with really good software, really good kind of analysis tools, scanning tools, whatever. And if they're not embedded in with your broker already, there are loads of independent ones as well. So it's accessible. You can get to it easily. You don't need a lot of money. It's not a great barrier to entry for it. There's a load of information out there. It's a really good way to get going from that perspective. Okay, number 2 I've got here is, I've got this number 2, yeah. Leverage, however you want to pronounce it. This basically means that you get a lot of bang for your buck. In other words, if you're putting up, £10, for example, you're going to be able to be in charge of probably, this is varying actually now, and there's new legislation potentially coming in, which might adjust this, but you can get 100 to 1 on your money, 1,000 to 1 in some cases, but whatever the figure is the important thing is you can get to control a decent amount of money for not a lot of deposit. Now, there's a double-edged sword, and I won't go into the pros and cons of leverage in this video. I've done another video about that before, so go and check it out on the channel. But the good thing is it means, unlike stocks, for example, where, especially US stocks, where you only get a very small leverage, you can only do 4 to 1, generally speaking. Sometimes it's a little bit different, sometimes a little bit more, depending on if you've got a special deal. But generally speaking, that's governed by the actual US government itself. So, unless you're part of a kind of pool of traders doing something different, then you're going to be restricted with your leverage with stocks. And it's the same also with UK stocks. The brokers will give you less leverage, however you'll pronounce it, purely because they're open to the volatility of gap risk and stuff. Whereas they're prepared to give you a little bit more leverage with Forex and currencies, obviously because the value is different, but also because there's a wide range of people trading them. They're generally almost market neutral hedge, easy for them to hedge. There's not a big gap risk as such. Yes, we had that, did have the incident with the Swiss not long ago, but generally speaking, they are less, it makes them less vulnerable to kind of fat tail risk, if you like. So the brokers are happy to give you more leverage, which is good for us as traders. It means you don't have to put as much money in the account. There are some downsides to it, but generally speaking, that could be considered as an upside when treated with the right kind of respect. Okay, the third thing I've got here is spreads. The spreads are very, very tight. Regardless of what broker you're using, of course, there are going to be some brokers who have got larger spreads than others. It's a competitive commercial environment and a decision they make based on, it's a commercial decision. But generally, the spreads are so tight. They almost become irrelevant when you're trading, even if you're day trading and scalping. You've got to be careful, obviously, if you're scalping very, very aggressively. But, you're talking like tenths of a pip. So you're talking really, really tight spreads. And when you've got an average range in a day of 100 or 200 pips or 50 pips even, of 4.4 or, 0.1 or 0.7 or even 1 pip isn't really a lot in the scheme of things. You've got to be very aggressively scalping on a kind of seconds time frame for that to be important. So for most of us, even day trading, swing trading, obviously the spreads are so tight. We don't have to worry about them at all. Whereas if we look into some stocks, for example, UK stocks, some of the smaller ones, the spreads are quite wide. They can be because they're dictated by the market, and if there's less liquidity there, I probably should put liquidity in a minute, but we'll talk about that in a second. That's slightly different. the spreads can be quite wide on some smaller cap stocks because there's not liquidity there, so you end up paying sometimes quite a lot, and of course that then dampens the effect you can have on day trading. You can't perhaps day trade some of the smaller stocks because of that bigger spread. So a really good reason to trade currencies is the spreads are almost negligible. They're so tight for most brokers, you don't have to be concerned about them. Okay, the other thing I've got here is number 4 is the access to tools. What I mean by that, I mean that there are so many charting packages. We talked about that with accessibility. That was generally from a trading perspective, but I touched on the fact that you could use, there's loads of charting packages out there. There's loads of software out there, free and paid software that will allow you to scan, will scan for chart patterns, will scan for volatility, will fire alerts off for you. We'll give you social signals as part. There's so many things out there, and generally they're free to very, very cheap. So the accessibility for that kind of thing is very, very good. Whereas, like I say, if you're trading some maybe thin commodity like orange juice or something like cotton, you're probably going to have to go and seek some sort of tool if you wanted that, and it might not be up to your standards anyway. So the access to tools is great. There's so much stuff out there to get going with. Mobile apps, just an array of stuff that really makes your life a lot easier. You don't have to custom code anything or anything like that if you want to receive some sort of data or some sort of alert or some sort of signal, whatever it may be. It's normally always out there. What I've got here, I've got availability as well. What I mean by that, I mean that it trades Monday to Friday, 24 hours a day, 5 days a week, opens up on Sunday evening. It will fit around your lifestyle. In other words, if you're working during the day, you can trade the yen in the evening. If you're working in the evening, you can trade the pound in the morning. Whatever time frame you're on, whatever time zone you're on, it will accommodate you. You can trade any hour of the day, whatever you like, any currency pair. It will follow the sun around, and the liquidity will follow the pairs around as well. So it's not as if you've got to be stuck trading, an illiquid pair during the early hours of the morning. You can just go to a liquid pair because they happen to be up and they'll be trading that more actively. So a lot more availability. It means you can trade when you want, how you want. You don't have to be waiting for the opening bell. You can fit it around your lifestyle, which is very, very convenient for a lot of people. Now, one thing I want to just add is liquidity. We didn't mention it, but that is obviously a good aspect. But let's be honest, okay? Anyone who says that liquidity and it's a multi-trillion-dollar market and that's why they're involved in it, it doesn't make any sense, that, because unless you're swinging around huge amount of size, the stock market, most of the stocks are going to be able to accommodate trade sizes for you and I value. So liquidity is not that much of an issue with FX. Of course, it matters if you compare it to something very thin, like a thin commodity or a thin stock or something. Yes, there are those thin, but most of the days, guys, you're trading indices, you're trading the bigger commodities, you're trading the big stocks. Liquidity is not really an issue anyway. So, but anyway, those are the main things: accessibility, leverage, spreads, access to external tools, and availability of trading. Those are the 5 reasons why you should trade Forex. If you like this video, guys, give it a thumbs up. Don't forget to subscribe. Leave a comment in the comment section below of your thoughts about reasons to trade Forex, and look out for the next one. See you later, guys. Bye-bye.